Hi, welcome to Dollars with Diana. In this episode, I'll be breaking down McDonald's. Is it a good stock to buy right now? Should you buy McDonald's? Just a disclaimer, this is not financial advice. I am providing you with the company's valuation, future growth, and ownership so you can decide whether or not it is a good stock to invest in. And if you're new here, hi, I'm Diana, and I created this brand new channel so we could increase our wealth together $1 at a time. I do currently own McDonald's. I purchased it several years ago, and my cost per share is $120. So we're going to reevaluate today to see whether or not it has any growth potential. And by the end of this video, you can decide if you think that it is worth the investment. So we're going to take an in-depth look at McDonald's. However, if you're short on time, I'm going to summarize it right here for you. All right, so McDonald's owns, operates, and franchises restaurants under the McDonald's brand in the United States and internationally. It is currently trading at 5.5% below our estimate of its fair value. The earnings are forecasted to grow 6.5% per year and pays a reliable dividend of 2.24%. There are some risk analysis, so let's take a closer look at these. So here are the risk checks for the company of McDonald's. Are they in a good financial position? They have a high level of debt. Is there been a substantial insider selling in the past 3 months? Yes. However, they did pass. Are there any concerning recent events? No. Did they have meaningful market capitalization? It's $226 billion. Are they forecast to achieve profitability? Yes. Do they have sufficient financial data available? Yes. Are revenue and earnings forecast to grow? Yes. Is their dividend sustainable? Yes. Have profit margins improved over the past year? Yes. Have shareholders been diluted over the past year? No. Do they have high quality earnings? Yes. Do they have negative shareholders' equity? It says McDonald's has negative shareholders' equity, but this is the result of shares buyback. Here is the community versus my fair value and McDonald's consensus analyst target. So we have the current price of $316. It's 65% overvalued, and the fair value is $191. So here we have the earnings expected from 2030. So it would be $10.3 billion in earnings. All right, so who are McDonald's Corporation competitors? Currently, it says Starbucks, Chipotle, Yum Brands, and Restaurant Brands. I'm not sure if any of these two includes like Burger King or Jack in the Box. Even Chick-fil-A, I would say, would be more in line to be McDonald's competitors just because it has that fast food kind of burger fry feel to it. Price history and performance. So here we have max of 2025, which is $316. And let me move my face this way. So here we have April. And wow, it has been sort of like a rocky ride, right? On this chart price analysis. Then we have recent news and updates. Okay, so McDonald's on March 12th has announced executive changes. Unpleasant surprises could be in store for McDonald's. That happened March 30th. Value menu, digital focus to sustain competitive advantage, upgrade to buy. Okay, so a few mixed things here, like buy, but then unpleasant surprise. No one wants to hear that about their company. Return versus industry. McDonald's exceeded the U.S. hospitality industry, which returned 2.8% over the year. McDonald's exceeded the U.S. market, which returned 7.8% over the past year. Here's McDonald's, which is low, and then the industry average market volatility, which is in this mid-range. McDonald's has not had significant price volatility in the past 3 months compared to the US market, and McDonald's weekly volatility of 4% has been stable over the past year. It was founded in 1940. It has 150,000 employees, and the CEO is Chris. So here we have the corporation fundamentals summary. The PE ratio is 27 times, and the PS ratio is 8.7 times. We have earnings and revenue. The revenue is 25 billion, 11 billion for cost of revenue. The gross profit is 14 billion, 6.5 other expenses in billions, and the earnings is 8 billion. Dividend rates. I currently have mine set up that it's drip, so when it does pay out its dividends, it just reinvests into the company and buys a little bit of more shares each time. So the valuation is McDonald's is undervalued compared to its fair value and analyst forecast and its price relative to the market. So below fair value, and price to earnings versus its peers, and price to earnings versus fair ratio. Okay? Hey friend, let me ask you something. Do you have a money block? And how do you know for sure? Well, take the free money quiz down below to find out. All right, let's continue our evaluation of McDonald's. The current price is $316. The fair value price is $335, and the number of analysts were 29. So we talked about the key metrics here earlier. Price to earnings ratio versus a peer. So again, it has Chipotle Mexican Grill, which honestly I would not even compare that directly to McDonald's. They have a whole nother type of food, and their clientele I think might not be the same. Yum Brands, here's McDonald's, Starbucks, and Restaurant Brands International. It says McDonald's is a good value based on its price to earnings ratio of 27 times compared to the peer average of 29 times. All right, historical price to earnings ratio versus the industry. So here we have the industry average is 22.4 times and McDonald's is 27.5 times. Here's more comparison of the industry averages. So McDonald's is expensive based on its price to earnings ratio of 27 times compared to the US hospitality industry average of 22 times. Let's look at the price to earnings ratio versus fair ratio. So McDonald's is good value based on its price to earnings ratio, which is 27 times, compared to the estimate fair price to earnings ratio, which is 31 times. Analyst price targets forecast for the next year. It says that the average 1 year price target is $327, which is a 3% increase, and the analysts agree that this range spread is less than 15% from the average. So here we have the forecast, so 2024, 2025, and here is a projection up until 2026. Future growth analysis. McDonald's is forecasted to grow earnings and revenue by 6.5 to and 4.6 per year. I also wanted to add something important. If you see it often or use it often, I think that might be a good indicator to invest in the stock. For example, I see Amazon delivery trucks all over my neighborhood and on the highway. So I know that it is used by many, and I myself use Amazon, so why not own Amazon? The same for McDonald's. Well, I see McDonald's everywhere, off every major highway, and I even have the McDonald's app. So I get the, frappe, the mocha frappe, and I have their deals and specials, and I don't eat often because, it's not the healthiest choices, but I do utilize McDonald's. So if you use something often, let's say you go to Lowe's or Home Depot often, and you notice that other people do too, why not own a piece of that company? Just wanted to add that in. Okay, analyst future growth. So here's the company, 6.5%. The industry is 20%. The market is 14%. Forecast of annual revenue growth. This company is 4.6%, industry is 9%, and market is 8%. All right, so here are some more checks, and we have some past performances here where you can see the return on equity. McDonald's return on equity is forecast to be very high in 3 years' time. Past earnings performance. The past earnings performance criteria check meets 2 out of 6. So it has been growing earnings at an average annual rate of 10%, while the hospitality industry saw earnings growing at 33% annually. Revenues have been growing on average a rate of 5.9% per year. So here's the revenue and growth breakdown from its earnings to its expenses and cost of sales. Net operating expenses, $3.6 billion. Admin, $2.4 billion. Other, $446 million. All right, so here's the earnings history. So it does look like, it was in 2015, 16% profit. In 2018, 29% profit. And September 2024, 31% profit margin. So it does have high quality earnings and free cash flow versus earnings analysis. Past earnings growth. It says McDonald's earnings have grown by 10% per year over the past 5 years. Return on equity. McDonald's liabilities exceeds its assets, so it is difficult to calculate the return on equity. Return on assets. Financial balance sheet. It says McDonald's has a total shareholder equity of negative $3.8 billion and a total debt of $38 billion, which brings his debt to equity ratio to negative 1,013%. Its total assets and total liabilities are $55 billion and $59 billion, respectively. Okay. Financial position analyst. It says McDonald's has a negative shareholder equity, which is more serious situation in short-term assets not covering short-term liabilities. McDonald's has negative shareholder equity, which is more serious than short-term assets not covering long-term liabilities. All right, the history. Negative shareholder equity, has negative shareholder equity. Then it says the debt coverage. McDonald's debt is well covered by operating cash flow, and McDonald's interest payments on its debt are well covered by EBIT. All right, McDonald's dividends and buybacks. The dividend criteria, it meets 5 out of 6, and McDonald's is a dividend paying company, currently yields 2.24%, and it's well covered by its earnings. Stability, growth of its payments. And dividend yield versus market. McDonald's dividend of 2.24% is higher than the bottom 25% of dividend payers in the U.S. market, and McDonald's dividend is low compared to the top 25% of dividend payer in the U.S. market. It says earnings coverage with its reasonable payout, 59%. McDonald's dividend payout are covered by earnings. And cash payout ratio is 75%. McDonald's dividend payments are covered by cash flow. Okay, and management, we talked to Chris as a CEO. Compensation analysis. And he's been in tenure for 5.4 years. Leadership team. They are quite new here. 5 years, 2 years, 4 years. Average 10 years, 2.7 years to lead McDonald's. Wow, that's surprising. Okay, and ownership. Okay. Insider trading volume. There's a lot of shares that have been sold compared to shares bought by individuals. Ownership breakdown. So 0.10% is government, 0.17% is individual insiders, and 25% is general public. So institutions own 73.8% of shares. Top shareholders: the Vanguard, BlackRock, JP Morgan. Okay. And then where is it located? Oh, the headquarters is Chicago, Illinois. Very cool. All right. Well, friend, what do you think about McDonald's? Do you currently own shares of McDonald's, and what are your plans with it? Are you holding it long term? Are you shorting it? Thank you so much for watching until the end. I hope to connect with you soon, and in the meanwhile, check out this video next.